For most of last year, the medical device stocks roared higher, the sole bright spot in the broader healthcare sector. And during that run, Edwards Lifesciences, EW, was leading the way. This company is a maker of devices to combat heart disease, including a revolutionary non-invasive heart valve replacement. However, during the fall, the whole cohort gave up the ghost after Edwards Lifesciences ran up to an all-time high of 120 in early October. In part, that's because the company reported a not-so-great quarter, and then in November, we got some less-than-stellar research data that sent the stock tumbling to the low 80s. Over the last week, the 6 weeks, Edwards Lifesciences is making a comeback. It's rallied back up to 99 as of today, thanks in part to a bullish investor day last month, where the company laid out some positive guidance for 2017. Plus, just yesterday, the company painted a pretty darn compelling picture at that big J.P. Morgan healthcare conference. I think this is a case where you need to take a step back. Look at the longer-term track record. Even after the sell-off last fall, Edwards ended 2016 up nearly 20%, and the stock's given us a fabulous 176% gain since we last spoke to the CEO in January 2014. So is Edwards ready to get its groove back? Let's check in with Mike Mussallem. He's the chairman and CEO of Edwards Lifesciences, get a better sense of the company and its prospects. Mr. Mussallem, welcome back to Mad Money.
Thanks, Jim. Nice to be here.
Sir, your level of confidence is pretty extraordinary. On the transcatheter aortic valve replacement, you were talking about doubling the size of this between now and 2021. How is that possible?
Well, right now we're only treating really the sickest patients with this technology. The catheter has been improved to use on patients with severe aortic stenosis that are at intermediate risk to go through surgery. We're in large clinical trials, which we expect to be successful, and there's a lot of momentum. So we expect not only will this be more than a $5 billion opportunity by 2021, but beyond that, it'll be much larger yet. There's so many patients that could benefit from this, and it's an underdiagnosed and undertreated condition that's deadly. And so you can see why the potential is large.
Well, let's go over what the Unload trial would do, the Partner 3 trial would do, and I think the most important for many of our viewers, the Intuity Elite, because these are really big markets that you'll be tackling.
Yeah, so let's talk about those trials. These are indication expansion trials, if you will. So now the trial that's going on today, the Partner 3 trial, is one that randomizes patients either to open heart surgery or to transcatheter heart valves. And this is a group of patients that's pretty healthy enough to go through surgery. We expect it to say that a transcatheter heart valve is at least as good, if not better, than surgery. That's going to open this up to a group of patients that it hasn't been available to in the past. This trial will go on beyond that. There's one called the Unload trial and another one called the Early TAVR trial, which will be beginning just this year. It will actually evaluate patients that have severe aortic stenosis but don't have symptoms yet. We believe that aortic stenosis is a deadly disease, much like cancer, and the idea of just watching it and waiting is not such a great idea because this disease is deadly. And so the idea that we can actually prove that we ought to change the practice of medicine is something to look forward to doing. And the procedure has been such a winner. It's proven to be very safe, it's fast, quick recovery for the patients, really remarkable.
Well, Michael, I got to tell you, one of the things in your presentation that so intrigued me was that you have to do some education. There are cardiologists who don't understand the wonders of some of the things you're doing. Why is that? I mean, to me, it would seem if I'm a cardiologist, how could I not know what Edwards is up to?
Yeah, you know, many of the cardiologists that are so-called interventional cardiologists are very well aware of this treatment and really expert at it. But when you get into general cardiology, it's a little smaller niche. And if you're actually a general practitioner, it's smaller yet. And you may not be familiar with how rapidly this technology has evolved. You may still be thinking the only treatment for these patients is actually opening the chest and stopping the heart. And that's one that has real influence on the decisions of patients and doctors. So part of our job is to make sure we get it out there. In the past, we've helped the leading centers share the message. In the future, we'll probably be more forward-leaning and actually find ways to reach right to patients, right to general practitioners, and to general cardiologists.
Yeah, I think that people still think you have to crack the chest cavity open. You've stopped that. One of the things I love about your presentation is you purposely say, we do not believe in diversification. Not many companies say that. Tell us why you feel so strongly that you put it at the top of your presentation.
Yeah, you know, it's key. It's who we are. It's core to our strategy. We don't believe necessarily that bigger is better. We believe that being better is better. In our particular field, we feel like if we were to focus on just this disease, these structural heart diseases in critically ill patients, that we can have a big impact on their quality of life and help them live longer and better lives, and that the opportunity is so substantial that we don't need to diversify to have big opportunities, and that by focusing, we can get really good at it. And I think our track record speaks for itself. This kind of focus has meant for the last, 8, 9 years, we've grown in double digits. And when I look ahead, I've probably never been more excited.
All right, well, one last question. I see the president-elect is saying, look, we got to scrap Affordable Care right now. Look, I'm a big believer that if you got something that saves lives, gets people out of the hospital faster, there isn't a single program in the world that doesn't want it. Should we be concerned about anything involving Affordable Care Act and Edwards Lifesciences?
I don't necessarily think so. Of course it's going to be replaced, and it sounds like, and we don't know what it might be replaced with. The things that we're focused on is to make sure that we have access. There's a provision within the Affordable Care Act, which is a medical device tax, which we think is a job killer and should be eliminated permanently. That's a natural. But beyond that, life-saving technologies like Edwards and the incredible things that happen from people in our industry, in particular our own employees, that they create every day, those kind of things need to see the light of day, and I think patients and voters, frankly, will love that.
Yeah, I totally agree with you. That's Mike Mussallem, Chairman, CEO of Edwards Lifesciences. We've liked this company for years and years and years, and we continue to like it. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.